Hey traders, Chris Pulver here. Happy Tuesday. Sorry I didn't get a chance to get the weekly outlook out to everyone on the 6th of April, but this is the week of the 6th through the 10th. It's actually Easter weekend. We have Good Friday and Easter weekend. I thought this would be a pretty fitting image to talk about with the coronavirus pandemic and the stay-at-home mandate to help flatten the curve. This is pretty much what we'll be doing this weekend for Easter. So I think that this is a good time to discuss what's happening in April as we kick things off. This kind of first week of trading, first full week of trading in April, the market is showing a really strong attempt to balance. I think that's what we're noticing is we had everything from March was horrendous. Some of the best hedge funds in the world took a huge loss, anywhere from 10 to 20%. One of the benchmarks I personally use is the Barclay Hedge Fund Index. Currently, after Q1, it's down 10.75%. For around 4,000 funds in the world. And the average index, the S&P, the Dow Jones, the NASDAQ, the US markets down anywhere from, even still off the highs, we're still around 20% off the highs, with the extremes of the correction in March getting down to around 25 to 35% respectively. So we're still well off the highs from February. I think the damage is in. I think the structure has changed. I think that right now April is a good effort to balance and correct. So we're going to talk about that today, but I do think that the adage sell in May, go away is going to hold true, especially with the end of the month in April being a pivotal and critical time for the U.S. and U.S. economy, because if we have to extend our stay-at-home mandates, if we start to see additional unemployment claims continue to rise and continue claims rise and the GDP contraction or the estimates being reduced, I think we might see another turbulent month in May as, again, the saying is sell in May, go away, and what we saw in March could be replicated in May before we head to summer trading. So anyway, I think that April is a good month for balance. This is what Easter is going to look like. Stay at home, do your part, flatten the curve. Coronavirus is the real deal. I was looking at something. There's a hospital, Spectrum Health in Michigan. Around one person can infect around 390 people with the flu. That one person can infect like 90,000 people with coronavirus. That's not an exaggeration. It was insane and staggering. It's crazy how contagious that this is. So again, do your part, stay home, don't think crazy, and let's talk about the markets. Read up on some research from Robinhood. They had some powerful takeaways here for the coronavirus and the corona economy, as they're calling it. What's popular, what's in, what's out, working from home. Digital and touchless payments, limiting those contact points. Even if things get back to normal, I feel like this is going to change kind of interaction and social action. I'm not necessarily saying for the better, but certainly being way more kind of germ and interaction conscious than we ever have been before. Live stream fitness, direct to streaming movies, delivery, everything. Right now, if you're ordering anything, I'm sure Amazon is still alive and well, which it certainly is. Groceries. There's probably more and more people going to either at-home meals that are already pre-prepped or just doing curbside pickup or doing grocery deliveries without having to go in store and limit those contact points and interaction. And best part about staying at home and working from home is casual workwear. I know that I'm working very comfortable. The only thing I don't have is a good-looking haircut because it's getting pretty nasty. Takeaway number 3, the markets. I thought this was interesting. And I actually saw this on Twitter as well, looking for, how will the market recover? Is it going to be more of a swoosh or more of a V bottom? Obviously, with the $2 trillion survival bill, I thought this is a really interesting way to phrase it. So it's not a stimulus bill, okay? This is a survival bill. Like, this was to offset the intensity of the coronavirus. So a survival bill versus a stimulus bill. Is it going to be a V bottom or will it be a swoosh? Will we round out these lows? Will we have, another dip or another kind of stall of these lows until the market can get some better footing and traction, and then we make this slow and steady recovery? Or will it be, explosive downside, explosive upside? We don't know yet. So will it be a V-shaped recovery or will it have more of the swoosh or the U-shaped one? Will the government take ownership in bailout companies? They're talking about bailouts in the airline industry, tourism industry, cruise lines. Who will enter bankruptcy? Will there be an aggressive season for mergers and acquisitions? When will the IPO market open again? There's not a lot of cash to be thrown at companies that show no profits. So if the IPOs are taking a back seat, everything needs to pretty much be back under control. Do we have survival of these companies if bankruptcy takes over? How detrimental will it be to the overall outlook of the economy? Will we still look at the overall contraction? So I just thought this was something that we're considering. When is the recovery? How long does it take? And how does it take place? Is it a V? Is it a U? We'll find out. Okay, so let's talk about the markets this week. Like I said, April is a pretty good looking balance point. Just the last couple of days, let me go into the charts right here. So 2 things I'm looking at this week for trading. Again, it's a holiday week with Good Friday and the weekend, so I think we're going to have some thinner markets heading into Friday. Most of the banks are off on Friday morning, and there's probably going to be some limited trading on Friday. However, oil is going to take center stage with OPEC meetings on Thursday. This is U.S. oil. I think there is a really probable level here to get back into at least $36 to possibly $40. So I do think that oil will have a little jump to the upside, provided that Russia and OPEC and the U.S. can get along. We can start looking at some type of resolution. The same type of global effort from central banks is going to be needed for production cuts in oil. We need OPEC, we need Russia, we need the U.S. to agree to some type of consensus on what they're going to cut for production. The rumor is right now we're looking at 10 million barrels per day. If that is the case, that was also why you started to see the big jump last week. Oil surged like 22% in a single day, which is an amazing recovery, of course. But do we have more upside towards this $36 and $40 level? All that is a technical level from a massive gap over the weekend. So I do think that that structure holds true. We could have this recovery and rebound in the short term. That's what I'm looking at for this week. If everything comes out positive and as expected, then we can start pricing in oil recovery. How high does it go? We don't know. I mean, we have lows right here at $42. That was a breakout point at $42. So conservatively, 36 to 40. If you are long on oil, long on futures for this, make sure you're protecting all those profits in that $36 and $40 level, just in case the structure is broken. And again, I mean, a lot of it is about supply and demand. I think the optics of OPEC right now is, OPEC is going to want to say whatever is needed to get oil to stabilize. I think Russia wants to see the same thing. I think countries that are oil dependent certainly would like to see oil much, much higher. So getting into that, mid $30 to $40 level, I think gives everyone a sigh of relief. And then we can see what happens next. But I think this week with OPEC, that would be what I'm expecting to see oil on the rally. I'm looking for the CAD to do pretty well with that. I'm looking for commodity-based pairs like the New Zealand, the Aussie, and the CAD to have a pretty decent week. We're actually seeing that reflected right now. Futures market continues to be on the rally. So get out of here, sponsored ad. The heck. There we go. There's futures. So just on the morning, this is Tuesday morning doing the video, and futures is up on the rally pretty aggressively. Yesterday we had a great day in the U.S. market, 7+% across the board. But remember, don't get ahead of ourselves. This is the reality. Okay, look at the SPY. So from high to low, we had about a 30% correction. Now we're closing above. And this is one thing that was really important from yesterday. Okay, so we're closing above that 38%. I think that this trajectory and that confirmation just above that 38% means we're going to have a bit more of an upside look into this 50 to 55 to even 61% zone. There's a nice little, kind of island gap in here on the SPY. I think we come back into that 50% zone, which means there's some more risk appetite to the upside. I think as the stock market rallies, we'll continue to see the VIX drop a little bit, which did get back below $50. You can see here that the VIX is 44.20 off the highs of nearly 90, which we haven't seen highs like that since 2008. So the VIX has been in, reset mode. The stock market's been in balance mode, but the reality and the fact that we've essentially had a global economy shutdown and global economy contraction, and it's going to be ugly. I mean, I think that right now the market's doing a pretty amazing job of shrugging off the reality, but I think we come back into this balance point. We have the April balance, and then it's sell in May, go away. We look to see if we revisit these lows. And part of the reason that I'm looking for this, and part of the reason I want to be, watching carefully for this rebalancing, is because I want to be positioning my portfolio accordingly to make sure that if we get this recovery, that I can profit from this again. Okay, so there should have been a lot of profit opportunities here if you were long inverse ETFs, if you were long anything volatility, if you were basically shorting stocks on margin. I mean, there are ways to profit when the stock market is dropping. When the stock market drops, I love those inverse ETFs. There's single, double, triple leverage inverse ETFs that, I mean, they all just soared. I mean, there were anywhere from 400 to 500% gains across the inverse ETFs on the SPY. That's primarily what I traded, and then the VIX as well. I mean, I traded VIXY, UVXY, TVIX. there were lots of good symbols there. So, watching the VIX, watching the stock market, I think we can have some more, again, shorter term profits, because this might be just another bloodbath for a month or two. This might be an aggressive May, and then June and July and August, we don't really have much traction. And then we have to decide towards Q3, Q4, do we make a recovery or do we continue to fall? We don't know. But I do think that this April rebalancing is important. 50% is right there, high to low. 50% allows the market to say, hey, great job, we rebalanced. But who's in control? I think the bears are still in control. So I want to be positioning myself accordingly, not just in stocks, but also in Forex. So as we get into the Forex market, let's focus on some of those currency pairs. All right, but that is the SPY. Let's take a look at the Dow Jones. Dow Jones daily candle closing above the 38%. We have that island gap right up here, 50% pullback right around just shy of 24,000. So there's more upside here. Close in on some of that island gap around 24,000. From there, indecision. Do we sell? Is it good enough to get us into this level? Early May, can we push a little bit higher? But when we start noticing indecision, I'm going to start looking for opportunities to sell. Now, what does that translate to in the Forex market? Let's take a look. So I'm just going to go ahead and show my charts here. I'll use this one chart. This is Aussie. I'll start at the beginning, Aussie Cad. Aussie Cad, two commodity pairs kind of duking it out. I think Aussie Cad has room to get back towards 9,100, maybe a little bit higher, but take a look at this weekly chart. I could see Aussie Cad doing this. Okay, I mean, granted, we had this, really solid run to the downside. I could see Aussie Cad staying bullish towards 9,000 to 9,100. This is roughly 9,000 to 9,170 or so. Look at the lows. We have support. This could be resistance. So I am bullish on Aussie Cad for now. All right, but I think this is a good spot to look for some resistance. If we have resistance, again, from support becoming resistance right around 9,200. From there, I think we have a chance to sell this Aussie Cad again. Again, stop loss to be pretty tight. Stop loss around 9,200, 9,250, and try to take it back down to 85, 8,400. All right, moving on to Aussie Swiss. Aussie Swiss, looking at some balance levels here. Aussie Swiss is making a nice run to the upside. Here are my thoughts on Aussie Swiss. We do have some upside potential, which I'm liking, and I'm bullish on it right now. I'm staying bullish. I'm trying to scalp this bullish. Here's what I think. Previous low, flash crash low, August low. This structure has been broken. So I think with this recent slide from this high to this low, this is coming back to balance, and that's fine. Balance this area. Come back in and find what was support to become resistance. So I think that the Aussie does have some upside here into this 64 to 6,500 area, but my plan is to get this up into that 64, 6,500 area. If I am in profit or better, I want to make sure that I'm protecting everything that I have. Because from there, sure, we may see this price do something surprising to the upside, and this might be like the ultimate low to stay bullish on. However, if we have the stock market getting up to that correction area and starting to sell off, more than likely this will be the recovery, this will be the balance, and then from there, this support becomes resistance, and it starts to go down. Now, this might be the bottom, but if we get back up to 6,500 and we fall back down to 5,300, I do not want to be holding on to my long positions. So I'm looking to get this thing back up into this 62 to 6,300 zone, and from there, I'll take any ounce of profit that I can. I've been long off the flash crash lows. I'm looking to hold this a little bit longer, make some profit, and really just try to mitigate some of the risk, eliminate the risk, take some profit, and be neutral. I think the most important thing I can be for the rest of the year, especially over the next couple of months, is neutral and nimble. Because if we hit resistance and start to sell, I want to be able to take advantage of that, rather than me saying I've got to be long, okay? So I'm trying not to be overly biased with direction, because I do think that right now with that flash crash crush and that big move in March, that we are going to balance this. But once that is balanced, look at the structure. That did some damage to those lows. So I think those lows become a nice point of resistance now that we can get back to. We should be able to grab some profit there on any longs on Aussie Swiss, but I think that's going to be a safe place to be protecting. Same thing is true on Aussie Yen. Aussie Yen, take a look at what the damage was. We had previous low. That was a flash crash in January 2019. Retested the lows back in August. Giant straight down move to the downside. Look at where price can come back. Price can absolutely come right back up to that same level. We can come back there, test the low, that becomes resistance, and from there we end up getting a sell-off. So I would look for that rejection. All right, but that does give us room to the upside round of trade towards the round number at 70. So I would remain bullish on Aussie Yen towards 70. Make sure you're protecting your profits in there. So if we hit 70 and then we drop, you are taking profits here, protecting profits, and then be ready for that to turn over and be a sell trade once again. We can go after those lows, just like we did here. Flash crash, came after the low. Flash crash, came after the low. Flash crash, we can come after the low. Okay, don't be surprised to see that happen. All right, but for right now, I like bullish on the Aussie Yen. Aussie Dollar. Let me switch this over here. Aussie Dollar. Okay, same thing on the Aussie Dollar. Horizontal levels. Previous lows and one more off of the flash crash in 2019 and the August lows of 2019 right there. That gets us back to around 6,600 to 6,650. I think that this looks good to the upside into at least 6,400. Any higher than that, around 66, looks great. We could come into this outer trend line as well. Something like that. Outer trend line, that's probably the safer trend line for right now because we can connect multiple levels. In fact, it may be better connect this area here. Something like this. A lot of it's just looking at horizontal levels. If that is resistance, 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 that's 4 touches of resistance. We had a little fake out there. That gets us right into that cluster, previous lows, August lows of last year, 6,650. So near term, stay bullish, protect your profit around that 6,600 zone, 6,650 area, and then from there, be neutral. Be neutral and be nimble in case we have, fresh breakouts against dollar weakness, or we have, risk off once again where this is support becoming resistance and we can sell it and we can transition back down to retest those lows. Okay, moving on, Aussie Dollar, that's done. Let's go CAD Swiss. CAD Swiss, this trade I really like a lot. I am long on CAD Swiss. Here's what my broker platform looks like here. Let me bring this one over. Give me one moment. So I think with oil on the recovery and the pockets and inefficiencies that I see here on the CAD Swiss, I really like this pair a lot. So here is my setup. CAD Swiss, I'm just upside down on my net position. But what I'm looking for is this run aggressively into 71.10 and possibly right up into 72.50. Now, if oil goes well this week, if we see oil on the rally towards that $35 to $40 zone, I think this is a straight down move, a bullish price pattern, which I'll show you in a second, and this goes straight back up towards 72 and change. So my goal is to try to take this into at least this area for some short-term profit, but ideally try to hold it to this low and this low, which is around 72.50 for a decent chunk. That would be a pretty healthy chunk of profit for me. I'd be pretty happy with that overall. That would be from there. That's around 315 pips. Yeah, that's a pretty good chunk. That's a 2% gain on this particular account. I would certainly take that on this one currency pair and possibly more, because I'm looking to also increase my trade size as it goes up. So I've got some orders stacked up, but again, short term, profit at 7,100. If I can get this to run a little bit higher towards 72 to 72.50, I would absolutely love that profit there. So I do like CAD Swiss long, and where am I looking to get long? It's anywhere now. That price pattern is a bullish head and shoulders. You can see it pretty clearly on the daily chart. So if you take the highs and connect the dots right there, we have a left shoulder, head to neckline, and right shoulder, and we broke above with the daily close right there. So hopefully this is going to be really straightforward. If we have a daily candle close and 1 day of indecision, hopefully the next day is bullish into at least that level. And if we have a couple days of bullishness with this bullish head and shoulders trend, we're going into this area here for some short-term profit and all the way back up here towards 72.50. So target 1, target 2, target 3, trying to let this distance have the space that it needs to break out. So a little symmetry, a little Fibonacci swing, a little head and shoulders breakout. There's a couple ways to measure that. Something like this. If we have symmetry, we're going from this low to high swing, paste that, and then we have a higher low right there. That gets us up into 70.50. If we have the head and shoulders neckline break, which was right here, if we break that neckline, that gets us into that level, which is around 72.50. So between 70.50 to 72.50, we should be bullish. If you want to be more conservative and more, probability-wise, take your profit around 70.50 or 7,100. But I think we can finish this move into that 72 to 72.50. So I'm looking to stay bullish on the CAD Swiss. Let's see, CAD Swiss, CAD Yen. CAD Yen, I don't particularly like. We had a gap in oil that was filled, a gap in the CAD pairs that were filled. Yen could offer some retracements up into some of these levels. We do have a little bit of structure this way. We could have, price coming back into, say, 70, let's say 80, round number 80. That would be a decent balance point. Think of this like the stock market. If we had a swing from high to low and this market pulls back to 50%, that'd be the balance point. So that's right around 79.20 into that round number at 80. But personally, I'm not really doing much with the CAD Yen at this time. Swiss Yen, I'm going to leave that alone. Euro Aussie. Euro Aussie is looking actually really solid to the downside. The charts have, we've seen volatility shrink quite a bit. But let me delete this for a second. And, downside looks pretty favorable, connecting the highs and connecting the lows. We have a bit of a wedge going on. Now, I could see this coming back into some of these gap levels and some of this, ridiculous run from 6,100 to, 97. That is 3,600 pips of bullishness. So we are doing a pretty good job of balancing. What I'm wondering is, do we come back into, this cluster of support resistance? Do we come back in and actually find that gap from that weekend? This is a flash crash high that the market just ran right through. But do we come back in and find that gap? And if we do, and it's with this type of structure, this means that Aussie Swiss can continue to head higher. This might continue to slide lower. If we come into something like 1.70, all that looks great. Risk on to 1.70. Let me use a straight line. If we have risk on to 1.70 or possibly back into this low around 1.68, but from there, if this is a wedge where this price ends up getting narrow, then I could see this being a low point and we end up breaking back up to the upside. I think we can come all the way back up here again. But I'm not interested in bullish right now. I think that this is a great trade to be short. I think this is a great trade to continue to scalp short, just like Aussie Swiss looks good to go long. So I'm looking to stay short on the Euro Aussie and try to target, 7,200 looks fantastic. 7,000 is a round number, but I like the posture right now as we head into April, and we're seeing some, pretty solid strength on commodities, like oil, like the CAD, like the Aussie, and the New Zealand. So that's Euro Aussie. Euro CAD, taking some really good trades on the Euro CAD and took some really nice profit on the Euro CAD. It's currently trading at 52.47. Now, this was a trade I discussed last week, high to low. We broke this structure around 5,400. I had a robot that was running. It's my Right Trader Max robot. I took it right there, and my robot picked up about 500 pips of profit. Now, you might be looking at that. How to pick up 500 pips? It took multiple entries. It was in 3 entries here, and it was in 2 entries here. And I protected just here. It only had to move 200 pips, and I grabbed 500 pips of profit. So I'm pretty happy with that overall, and I'm going to let this robot trade again. So what I'm watching, of course, is we have support right here, which could still act as resistance. So we might have a short-term range trade back up that I may consider scalping. My preference would be that oil continues its recovery towards $35 to $40, and this breaks further down and pushes into this 127 zone, pushes into these pockets, pushes into some of these balance levels from this price gap. So I do think that we can push lower. If we break 50,200 and we get into 5,000, again, that's 200 pips of opportunity, but I could look at a system to trade and add on some multiple entries and hopefully take a 200 pip area and generate somewhere between 300 to 500 pips of profit. So that would be the plan on pound, or this is actually Euro CAD. But the important thing here is that we continue to push into this 5,200 zone and break it. If we pull back into 5,400, then I respect that. So this could be short term to the upside for a range, and stop losses go below. But once we hit 54, I would look at this support becoming resistance to sell. So we might have a range from 52 to 54. If we break 52, I want to remain bullish, break 52 and look to sell and stay bearish towards 5,000. I think that looks pretty solid. That's Euro CAD. Euro Swiss. We're at 105.77. I am wondering, when and if we're going to see a trendline break here. It's hopefully going to be sooner than later. I have some really intriguing and appealing bar counts on my couple of my systems. And, I think that on the daily chart, here's what needs to happen. I think price just needs to break this trend line. We haven't taken out this low. We haven't taken out, this high or this high. If we just stay sideways here, I think eventually, time passes as long as we don't do any structural damage to these lows. I think this Euro Swiss makes a recovery minimum towards 108, 108.50 perhaps, and ideally I'd like to see it up here towards 110.50, which is a yearly pivot and a longer kind of outer channel as well. So I would really like to see 110, 110.50, but the first step in this Euro Swiss is to get this thing on the right side of this trend line. So time could help. Price action, of course, could help. I mean, I would like to see the bulls finally kick this thing into high gear, see a weaker Swiss, like even just one big bout of Swiss franc weakness could help this pair get some legs to the upside. So I remain long on the Euro Swiss, but hopefully this will be, a pretty straightforward recovery towards 108 and change or 110. Euro pound, this one, trying to find a good trade opportunity on this pair. I would like to see this setup. I'd like to see if we can have something like this. Maybe some correction, some consolidation on Euro pound, and then one more leg lower. This is coming off of some significant monthly resistance. So I will try to find a trade here, but it's been a good trade to the downside. I took a scalp opportunity there, had a scalp opportunity back down to those lows. So I've made a few hundred pips on this Euro pound over the last few weeks. But for right now, as it's kind of slowing and stalling, I'll wait and see what's next. If it's a nice clean correction channel, then we sell it again. So be it. But that's a trade I'm going to wait for. Euro Yen continues to be a pretty messy looking currency pair. If I can type it in correctly. Euro Yen right here on the daily chart, 4-hour chart, daily chart, just compress it. You see just a lot of sloppy price action. I would stay out of Euro Yen for right now outside of some short-term scalping. Euro New Zealand is a lot like Euro Aussie. I'm favoring the downside for right now. So if we have more downside, stay bearish until this trend line breaks. We are breaking this horizontal low right there. So if we stay below that, high to low, pullback, I'd look for something like a 127 extension. There's a high to low swing. If we go from the 5.0 to the 127, that puts us in around 1.7714. Currently trading around 81. There's another 400 pips of bearishness there. So I would look for shorter term opportunities on some trending systems to trade it down towards the 1.8, the 127 extension. Again, price gap, previous low where this whole thing started after the flash crash found some lows. So I like bearish on it. I want to continue to scalp on, the 15-minute chart looks pretty solid. The 30-minute chart looks great. But I just want to make sure this is going to continue to stay bearish. So, getting to these lows and stalling is fine, but we break lower, then we trade lower. If we pull back to the trend line, maybe some resistance there, look for another chance to sell it on trend line resistance. We have resistance, 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 resistance. We could hit that again. So not a bad setup there on Euro Aussie or Euro New Zealand. They look similar. Euro Dollar. Okay, anyone's guess. Nice little pocket trade that we had from the lows at 107 to this pocket at 110, 111. I think that this is just going to continue to make lower highs and higher lows, which is going to make this increasingly difficult, something like this. I think this is still going to reach some type of indecision. I think this may have an inflection point. We might have this larger channel on the weekly take back over again, which looks like this. So after, a long-awaited 2-year channel, we expected some price action, and we certainly got it. But, man, it must have been a very crowded trade because there were some market makers that were really shaking things up. And that range, it's just, we're just not getting the clear breakouts, right? We had this crazy promising move from 108 to 115. We reset all the way back down to fresh lows. And now we can't break the high. Now we can't break the low. So part of me thinks that this massive shakeout might lead us to just more of this. We might have more indecision coming on the Euro Dollar. Maybe a slight downward angle until we hit these lows at 105. From 105, I still expect the dollar to at least offer that retracement or offer this correction into 115 and 117. But I don't know. The Euro Dollar is essentially, I'm really just looking at it like it's untradeable. If I want to scalp it, maybe it just doesn't have a high volatility trading range. So I'm really staying out of it for right now. Even if it came into this open space, I'm not convinced. I think that right now we kind of deal with this and expect it maybe to form a wedge. If price action gets clear, then we'll take a trade. If it doesn't, then there's other trades. Pound pairs. Pound Aussie. This one actually looks great to the downside. Okay, so I was looking for some resistance here. So I've got some other analysis up. Resistance. So this was our resistance. Let me extend that out. So resistance channel. Take that and copy it. And support channel. So resistance to support. So in the short term, looking at this on the daily chart, we've already hit these highs. We're starting to sell back off into these lows. I mean, this is bearish. I'm looking to scalp this to the downside towards, channel support around 96.50 or so. If it breaks that channel, this could be an amazing trade. If we break this structure, and that's the question, if we break this structure, then we would look at a lot of downside potential. But if we're going to drop from this high to this low and start going back up again, then we trade the channel. But right now, there's still room to stay bearish and protect your profit into channel support around that 9,600 zone. So I like that pair to the downside. Pound CAD is another one that I'm liking to the downside. It's currently trading around 73. Some short-term levels here. I was looking at a break below 71.70. If we get it, I'm looking to stay short. So this is similar to the setup I had on the EuroCAD last week. If we break below 71.70, I'm looking to stay bearish towards this low, which is around 66.50. We also have a Fibonacci extension at 63.60. So again, price has to break first. This would be scalping to the upside, maybe a scalp back up to the range highs. But if we break below 71.70, I want to be a trend trader to those lows. So just getting that one set up ahead of time. Pound Swiss. Pound Swiss, nice recovery. I did some good scalping here from 1,700 to 2,000. I'm waiting. I'm trying to figure out whether or not we are going to have this kind of slow correction before we have one more push to the upside. Or if we have this going to the upside first, finding some of these nice levels of support resistance and then dropping back down into a corrective zone. Haven't figured it out yet. So I'm waiting. But this was, breaking above these highs, aggressively scalping 117 to 120. Took some nice profit there. Now I'm waiting. So we'll find a setup here eventually. Pound Yen. Pound Yen does look like it has some upside potential if, and this is a big question, if we can break these highs. Okay, we have to break those highs in the Pound Yen. If we break those highs in the Pound Yen, then we can scalp, and this is probably what I'll do. Scalp to the upside. Look left, look left, look left. Lots of support over here, becoming future resistance. So we have room to the upside for sure, but we have to get above these levels. Otherwise, this is range-bound trading for right now between 134 and 132. Pound New Zealand, favoring the downside on Pound New Zealand. Again, pretty big range in this one. A lot of volatility back in March. Highs around 2.10, lows around 2.01. That's 1,000 pips. Okay, it's 900 pips. But if we are going to break this low, I would look at stay bearish to 2.01. If we come back up, we hit resistance at 2.1. I would obviously try to scalp that to the upside if I can in the short-term charts. But if we hit 2.10, well, if we can scalp it to the upside, that's great. And then we can start to get some bearish confirmation back down. So 2.1 to possibly 2.05, or from 2.1 all the way down to 2.01. So there's still range-bound conditions, but a big range and a big opportunity to trade. It's just trying to find that support and resistance levels to focus on. Pound US dollar, this looks a lot like the dollar Swiss. Or I'm sorry, the pound Swiss. We had a bit of a correction here. This is what I'm watching for. Can we break this high? Can we break that high? Are we trading this? I didn't use a very straight line there. Can we break this high? And can we hold these lows? We had this nice recovery off the lows around 1,400. Are we scalping up towards 1.2500? Can we break above 1.25? If we break above 1.25, then expect this to stay bullish towards this level, which is around 27. Could we come up higher than that? Possibly come up towards 3,000 is that big psychological barrier for the pound. Possibly up to 3,000. Okay, I think if we do run up into previous support or this level, those become resistance points to sell from. One of those two spots is going to be a solid resistance point. But that means in the short term, if we have the bulls break above 125, we could be scalping bullish. So I like, a weaker dollar right now. I think it fundamentally it makes sense with the continued claims and employment situation in the U.S. looking pretty terrible, and just recoveries against the dollar for right now. But, make it a recovery, make it a move back up to balance, and then we see, the pound weaken. So I like where we can go. I was hoping that we'd have more of this. It did, again, scalping from this level from 119 all the way up to 125. That was a nice little pocket zone right there. Now, I wanted to see a deeper pullback so I could actually take a buy trade. It's just not offering a deep enough pullback. So for right now, it looks like this is what I'm dealing with range-wise. Maybe it stays sideways. But watch for that little sneaky breakout above 125 because I think we can run at least to 127. So that's, the near term on the pound US dollar. New Zealand CAD. New Zealand CAD, I'm going to leave that one alone. New Zealand Swiss, pretty similar to the Aussie Swiss. Can we recover? Let's go to the higher time frame. Here's the weekly. Can we recover on this New Zealand Swiss towards these previous levels right in here? Can we get back into 6150 to 6200? Without, I mean, that's not asking this pair to do a lot. That would be, low to high, maybe a pullback and then a push. Or maybe we have this sharp move to the downside and then we have this sharp recovery to the upside. And from there, we neutralize our position, take our profit, protect our profit, and then be ready for either this to keep going higher or we start selling off again. There could be some resistance here with a trend line as well from this area. So between, this horizontal support and resistance around 6150 to potentially an outer trend line around 65. Of course, I'd love a big recovery towards 65, but I'm not holding my breath. I think that with this giant sell-off and potentially more selling coming in the stock market over the next maybe 1 to 2 months, that I'm just going to make sure that I can get some profit towards 6150, take that profit, and then be neutral going forward. New Zealand Yen, similar. Okay, look at the damage here. Flash crash low in January, previous low from 2016, August low. Look at the pocket right here, that giant weekly candle. I think we can definitely pull back to the flash crash level around 68.50 or so. 68.50 to 6,900 if you are long, which I do like. I think right now, this looks good to the upside. But respect the low, protect your profits if you're long. From there, that could be a rejection point to come back down. Okay, but right now we still have room. This is still another 300 to 400 pips to the upside, so I like bullish on the New Zealand Yen. New Zealand Dollar, similar. Can we come back into previous lows around 62? I think we can. Can we get to 62? Probably. If we do, make sure you're protecting. If you bought anything in here, we get to 62, protect. Okay, eliminate the risk. Take a small loss. If you're upside down from buying it in here and you're upside down, then get out of the trade. Because it's like, I would love to see this make a big recovery to there and all the way back up to here, but I don't know if that's going to happen. I think that with this damage coming back to here, 62 is now resistance. If it hits resistance and sells back off, I want to be able to sell that and not be stuck and tied to a buy position. Okay, so I'm looking to clear off some positions here right around that 6150 to 6200 zone. Dollar CAD, I'd like an opportunity to still sell the dollar CAD. I've taken some good profit on it already. Here's what I'd like to see if possible. Number one, oil is looking to make a move this week. If we do see that, then we will probably see the dollar CAD drop lower. If there's any way that this can pull back into this area around 4250 to 4300, if there's any way we can get a pullback this week and then short that, I think that would be a great opportunity to short with minimum risk and at least a range profit. So that'd be like 43 to 40. That'd be 300 pips, 4,300 to 4,000. But we could go lower than that because we could have this 1, 2, 3, 4, 5. We could have a fifth wave to the downside. Right? We have a massive price gap right there. We have all these inefficiencies as well. So I could see dollar CAD heading lower. Hopefully we have a pullback first towards 42 to 4,300. If we don't, then it's not the end of the world to just sell it on a smaller time frame and look for this to be a fifth wave move. Would I try to get all the way back and fill the gap entirely? No. I would probably take a trade from this swing and go after this is probably a 127. We should be looking at something like a 1618 extension. So let me go ahead and put a Fibonacci on here. So from this high to low. So high to low. And we pulled back right around that 618 to 786. We hit the 127. We pulled back again. I think even if I use, so either 38.27 or even if we have another swing right here, getting down to 3,800. That just, to me, that looks pretty good. 38.50 to 3,800 looks like a great spot to be looking to stay short. So if we can get a sell trade around 4,300, that gives us more room to work with. If we just break the lows and we scalp it, that's fine. Just go to a smaller time frame and trade an aggressive trend system. If that's the case, I will be using my Right Trader Max system. All right, so let me delete that Fibonacci. And let's move on to dollar CAD, which I don't really, actually dollar Swiss. And dollar Swiss is a lot like the euro dollar and the dollar index. It is a big cluster of a mess. Look at the daily chart. Longer term, I'd love to somehow see this pair get lower again, if that's the case, and not from a stronger Swiss, but hopefully a weaker dollar. If we had a weaker dollar to that level, I would gladly buy this again around 9,200 and try to hold it. I mean, we just have like a ton of range levels. 102 resistance, 92 now with this low at support. Trade the range. Wait for a good entry. Perhaps we have this left tip, center tip. If we have a little bit more, consolidation going on, we might have a nice little setup for dollar Swiss to head higher. And again, maybe this isn't the dollar, maybe this is the Swiss, which basket-wise I'd love to see. Euro Swiss, CAD Swiss, Aussie Swiss, New Zealand Swiss, even Pound Swiss look good to the upside. So if this sets up for a buy opportunity, I'm only really interested in buying the dollar Swiss. But the dollar index and the euro dollar are pretty confusing, and there is a relationship between those and the dollar Swiss. So if we see indecision on the dollar Swiss, then look to position accordingly, which means we might stay out of it. We might look at finding a breakout and then trading to the upside. So maybe we wait for now. Otherwise, I'll probably just sit here with a pending order to buy at 92, 92.50 and just wait it out. All right, that is dollar Swiss. Dollar yen. Had a chat this morning with my trading room. I think that this one is just going to be a big range for the year. There was so much volatility so early on that I think we have these major levels that the market has yet to break. So we have support right here around 100 or 101. The round number, of course, at 100, right there at the lows. We have horizontal levels here around 118. And this really interesting trend line and resistance around 112. So with all of this covering such a huge amount of space and a short amount of time, I think that what you're going to deal with as a trader is you're going to have a lot of indecision to work with. You're going to have, the bulls and bears are going to literally be fighting the entire time. Now, I will say that if we come back up to these highs and we reject, then I am a seller. If we come back to these lows and we reject, I'm a buyer. And in between, we will deal with a lot of the indecision. So what I would like to see is, can we reject for sells, reject for buys, or can we break out for buys? And perhaps even, this might be unexpected, but if we break out below 100, traders might not want to trade that, but I think there would be a ton of profit if we get below 100. I think 100, we talk about open space and open trading. If we break 100, we're talking about levels at 94 all the way back in here to 2012's rally into 90. It really could be setting up for a big move later on this year. Again, more reasons to be fairly neutral. Look at the big levels. We either hold this level at 100 and we defend it, and this becomes more kind of impossible range trading or more range trading until a bigger trade comes later, or this might be the year that this thing finally breaks loose. Break below 100. Break below or break above 112. 112 might not stop at 118. 112 breaking above that might go all the way back up to this high at 126. This would be kind of optimism on recovery, U.S. election perhaps. That would be worst case scenario. But either way, there looks to be like a ton of opportunity on those pairs. So that'll do it for this week. If anybody is interested in joining me, again, I offer this if you like it. You can come into smarttrader.com, go into Marketplace. There is a featured Flex Trading Room, which is my trading room Tuesday, Wednesday, Thursday. If you'd like to trade with me live, we've been doing pretty well. We have generated in the last 3 weeks of trading around 5,200 pips. So we're doing this live each and every day. Going back the last couple of weeks, I've got a great robot that I'm trading. It's called Right Trader Max. I'm loving this thing. It has been spot on for precision. It's been easy to trade in different time frames. We've had 1-minute trades, 15-minute trades, 30-minute trades. You can customize it with so many different features of setting ranges that it can't trade above or below until price breaks out. 52.85 for the last 3 weeks. So we've had a very active trading room. We've had a lot of pips coming in. We've made some really good trades, and we're going to continue to do that. So Flex Trading Room is an option. Okay. Also, for Facebook this week on Thursday at 2 p.m. Eastern Time, if you go into facebook.com/Market Traders Institute, myself and my friends Gary Fickhart and Tyson Clayton will be live at 2 p.m. on our Market Traders Institute Facebook page, and you can just tune in to the live segment, and we'll be talking about the market. We'll be talking about Forex. Last week we talked about stocks and a good watch list to have and where we'd like to buy. I know Tyson had I think 8 or 10 symbols and stocks to watch. I had about 8 to 10 to watch as well. Some were short term, some were long term. I was trading some oil stocks. In ETFs, I was looking at some bargain shops like General Electric and Kraft and Ford. And there's just a lot of options out there. So, stock market still remains on sale for the most part. I think if you're looking at these indices, that we come up into this, 50% zone and correct, and that's a great little balance and a good effort for April. But I think that the reality is the entire world has shut down for over a month, and the coronavirus isn't going away. The only way that we're not going to overrun the healthcare system is by literally staying home, because otherwise we don't have the capacity. The U.S. is not prepared for this. The U.S. does not have the capacity, and most of the world doesn't have it either. So this forever kind of changes how the world preps and moves forward. So this is being kind of ignored right now by the markets, but I think the reality is going to set in. And again, this could be a great recovery month. This could be a great retracement month, a great correction month. This could be risk on at what we're seeing in the near term. But May and summer, I think the reality comes back, especially if the U.S. does not come out of this, stay at home mandate or recommendation by the end of the month. So I know that's the timeline as far as extending to April 30th and trying to get back to normal after April 30th. But this right here on the U.S., this curve has to change. Okay, it has to change. We can't have this trajectory and say, okay, go back to work. It's just going to get worse. So hopefully the best case scenario is that things start to get back to normal, or at the very least, we start to see the proper adaptation into the new normal. And if that adaptation is this, working from home, remote learning, colleges going back to school, remote learning, online learning, high schools, K through 12, putting in e-learning curriculums. I mean, it's okay if we have to work from home or be home, but hopefully we can continue to operate. Time will tell, right? But anyway, good opportunities out there in the markets. If you have any questions, comments, feel free to leave a like, leave a subscribe, pass this video on to others that are looking for help out there with free education and opportunities to trade. That's what I'm here for. So take care, everybody. Have a great week. I'll see you soon. Bye.